I'd like to extend a very warm welcome to each and every one of you to the OER Finance and HR Summit 2018. At the outset, I'd like to express our gratitude to our chief guest, His Excellency Sayyid Salim bin Salim al-Busaidi, Under-Secretary of Administrative Development at the Ministry of Civil Services, for gracing today's event. We're also grateful to our guest of honor, Her Excellency Dr. Munna al-Jardani, Under-Secretary, Ministry of Manpower for Technical Education and Vocational Training, and Sheikh Mohammed bin Ghalib al-Hinai, Advisor of Human Resource Planning to the Minister of Manpower, for sparing time from their busy schedules to join us today. I'd now request Mr. Saeed Masoud al-Mashani, General Manager, Business Development, UMS, to come on stage to deliver the welcome address.
بسم الله الرحمن الرحيم. سعادة السيد سالم بن مسلم البوسعيدي، وكيل وزارة الخدمة المدنية لشؤون التطوير الإداري المحترم، راعي الحفل سعادة الدكتورة منى بن سالم الجردانية، وكيلة وزارة القوى العاملة للتعليم التقني والتدريب المهني المحترمة، سعادة الشيخ محمد بن غالب الهنائي، مستشار وزير القوى العاملة للتخطيط الموارد البشرية المحترم، السيدات والسادة حضورنا الكرام، أحييكم بتحية الإسلام، فالسلام عليكم ورحمة الله وبركاته. اسمحوا لي بداية أن أرحب بكم جميعاً أجمل ترحيب في مستهل مؤتمرنا هذا OER Finance and HR Summit 2018. إنه لمن يمن الطالع أن يأتي تنظيم هذا المؤتمر اليوم، والذي يركز على جانبين مهمين يعدان من الأثاث الأساسية التي تحمل بناء أي مؤسسة تريد أن تحقق النجاح وتسعى إلى استدامته، وأعني هنا التمويل والموارد البشرية. يشكل التمويل أهمية قصوى في عالم اليوم، فهو العصب الأساسي الذي تبنى عليه المشاريع والخطط، سواء في القطاع العام أو الخاص، وبدونه لا مجال للحديث عن تنمية أو بناء. ولعل ما شهده العالم في السنوات الماضية يشكل دليلاً لا يقبل الدحض على أهمية تنمية واستدامة الموارد البشرية. إن السنوات العجاف التي ما تنفك عن الظهور بين فترة وأخرى، والتي باتت تؤرق الجميع حكومة وشعوب، تتطلب منا جميعاً الحرص على حسن تنظيم وتجديد وإدارة هذه الموارد بطرق مبتكرة وذكية لمواصلة طريق البناء والتقدم. وإذا كان المال هو عصب الحياة لأي مؤسسة، فإن العاملين فيها هم روحها، فالموارد البشرية هم الملهمون والمبدعون والمحفزون لأي مؤسسة في عالم الأعمال الحالي الذي يتصف بالمنافسة الشديدة. فتوظيف المورد البشري المناسب والحفاظ عليه يعد من المهام الصعبة والأساسية التي تواجهها مؤسساتنا اليوم. وفيما نحن نودع العصر ما بعد الصناعي ونستقبل عصر اقتصاد المعرفة، تتجلى أهمية العنصر البشري في صناعة النجاح وديمومته. إن اقتصاد المعرفة يغير طبيعة نظرتنا إلى الموارد البشرية المالية والبشرية، فالمكننة والرقمية والآلات الذكية والذكاء الاصطناعي قد ثبت فوائدها وكذلك خطرها على هذه الاستخدامات جميعاً. وحدهم من يستطيعون استخدام وتوظيف قوة الموارد البشرية والمالية والموهبة البشرية في ظل هذه المتغيرات المتسارعة هم من سيكتب لهم الفوز والنجاح. هذا المؤتمر سيناقش العديد من المواضيع ذات الصلة بعنوان هذا الملتقى، ونحن على يقين بأن المتحدثين فيه والمناقشات التي ستعقب ذلك ستغطي نهم المعرفة لديكم مع صادق التمني للجميع بعميم الفائدة. والسلام عليكم ورحمة الله وبركاته.
Thank you, Mr. Saeed Al-Mashani. Before we proceed, we would like to thank our sponsors and partners, without whose help this event would not have been possible. Bank of Beirut and Oman Arab Bank, the strategic partners of OER's Finance and HR Summit. BMW Oman, our automobile partner. Takatuf Oman, the HR knowledge partner. United Securities and Tajir Finance, our support partners. Takatuf Oman Insurance, the Islamic insurance partner. Arabiya Falcon Insurance, our insurance partner. Knowledge partners, RAB and Zobel Solutions. Times of Oman and Ash-Shabiba, the media partners. Oman Printers and Stationers, our print partners. And Yalla Wa Offer, our digital advertising partner. Can we have a round of applause, please, for all the sponsors? I would also remind our guests that today, post-lunch, we have a workshop on the use of psychometrics in learning and development conducted by Naveen Martes, Client Director, Korn Ferry Hay Group, the largest executive search firm in the world. And we would welcome you to join the workshop. Today's event is being tweeted live, and you could join the conversation by using the Twitter handle at @OER_Oman, and the hashtag is #OER Summit. The proceedings of the event will be uploaded on YouTube in the next couple of weeks as well. Now let's get started. I'd now like to invite Mr. Deepak Agarwal, Director PwC UAE, to share his presentation on UAE's experience in implementing VAT and learnings for Oman. Mr. Agarwal has over 14 years of indirect tax consulting experience in a wide range of industries. He's worked with large multinationals and SME clients in indirect taxation, free zones and foreign trade policy matters in the UAE, Oman, Saudi Arabia, and India. Ladies and gentlemen, please join me in welcoming on stage Mr. Deepak Agarwal.
Morning, everyone. That was the picture when I started implementing VAT in UAE and KSA, and that's how I look today. Thank you, UMS, for giving us the first opportunity, because VAT, being a dry and complex subject, has been always given a stepmotherly treatment in terms of always getting a session which is just before lunch or post-lunch. So people could just have a nap when VAT is being discussed. Having said that, what we're going to talk about today is, I'll just have a video which the UAE FTA had put on 8th April. Completing their 100 days of implementation, and I'll use some of the video, as in the content of the video, when I'm talking about the other 2 points, around how UAE went about the process and the experience in UAE, and what challenges the Oman businesses could face when implementing VAT. Yeah, so I've seen UAE has generally been, taking pride in whatever it does, and it always puts it everywhere so as to communicate what efforts have been put into implementation of VAT. Now, coming to the process and experience around UAE, UAE had a very good approach in terms of talking to taxpayers. They always had these sessions, workshops, inviting industries to talk about how VAT would be implemented, what are the areas that the industries would have to face challenge when implementing VAT. So these workshops were very useful. Initially, the UAE authorities started with generic workshops, but subsequently around October, November, they had industry-focused workshop in terms of financial services, real estate, and etc. If you go back to the video, the authorities had two channels of providing clarification. One was through emails, and the other was over calls. And surprisingly, they had received like 787 calls per day, which were answered for the clarification which everyone was seeking, and around 1,100 emails which they were replying to every day from a VAT perspective. One more good thing which happened with UAE was the guidance note. It's a material which the authorities have been issuing on and off, and it's a very detailed document which talks about specific issues. So for instance, last 2 weeks back, they had issued a guidance note on director services. How will director services will be impacted from a VAT perspective? The other latest one is how to seek clarifications from the authority in a formal way. The last bullet in terms of how much time was given to the UAE taxpayers. Now, some of you must be aware that the regulations, which is the more important part of the law, came out only on 29th November last year. So it was around 32, 33 days which were actually available for the taxpayers. Having said that, but the authorities or the government was of the view that they have been giving a lot of information, providing a lot of guidance in terms of how VAT needs to be implemented. So from that perspective, there were challenges for some of the businesses who did not start in time from a VAT implementation perspective. We'll have to see what approach does Oman look at. We've been understanding that a similar approach is expected. Rather, one of the point we understood was they are going to look at smaller businesses in a different manner and giving some relaxation or liberty in terms of compliances. Experiences of UAE VAT. So some of the businesses found it very straightforward and they were up to the game. However, there were some organizations which did not register in time and they had to face issues around issuing tax invoices, talking to their customers, suppliers. So there were challenges around those. And what happened was some of the companies who were ready with VAT, but having suppliers or customers who were not ready, they also had to face an issue because their customers and suppliers weren't ready for VAT. The other larger challenge was around IT, technology, in terms of getting your systems ready with tax codes, ensuring that a proper tax invoice is issued by the system. So those were significant challenges around technology, IT, ERP systems. The other challenge was around import of goods. When goods were imported from customs, the TRN, the tax registration number, the VAT number was not linked, and therefore there were hindrances in terms of getting the goods cleared in time. VAT return filing, recently I think all the taxpayers have filed their returns now except for a few who have a 5 months tax period for the first time. There have been a bit of challenges around tax return, but largely we haven't seen. So if you go back to the video, it says 98.8% of the taxpayers have successfully filed their return. It's a separate matter when we come to actual assessment, we'll see how the returns have actually got filed. So just a question, how many of us believe that VAT will get introduced on 1st January 2019? Just a show of hands. Very few. And how many of us believe that VAT will definitely get implemented in Oman? Most of us. So the thought here is we have to accept the reality that VAT is going to get introduced. The challenge which we believe which was faced in UAE and KSA was around the timelines, assumptions around the timelines. The taxpayers or the companies who were required to implement VAT were always under the assumption that the government will give them more time. So if you look at UAE, as I said, 29th November is when the regulations came out, and it got implemented on 1st January. So we need to be very careful when it comes to factoring how much time we'll be requiring for implementing VAT. The other challenge around RFPs, RFQs, we've seen the companies getting very late into issuing RFPs, which itself takes a bit of time, so that point needs to be considered. And even after 29th November, some of the companies believe that it will get postponed. So again, that's not a good thought to have. Considering the fact that we know VAT is going to get implemented, you need to start working around that. And the other important point is around the scale of the exercise and around the entire VAT implementation work. I'll just touch on a few bullets in terms of, I've already mentioned IT preparedness. Some of businesses have a pretty big ERP system and which requires approvals or maybe changes from a global perspective. So that's a big challenge. Even smaller mid-sized companies do have challenges around IT system in order to ensure that you have the correct tax codes. Your system is able to correctly calculate the VAT, be it inclusive or exclusive. Your systems cater to ensure that you are taking the correct input tax credit, which is the VAT you pay on your expenses. So that's one aspect. The other is around supply chain. We've learned around here that similar to UAE and KSA, there is a complex supply chain in terms of getting goods from other GCC states or from outside GCC, for instance, China, India, etc. There could be supply chain where you're getting the goods in the free zone and then supplying it to the local markets. So you need to be very sure in terms of how is your supply chain at each leg getting impacted. So that's where some of the companies did not factor in the impact of VAT at each leg of their supply chain. That needs to be considered. Impact on contracts, that's an again important area, especially when it comes to contracts which fall pre and post VAT. So there are significant impact around those, and if you don't correct them today, the VAT which you would have to pay on them post 1st January could be a cost to the business. So those contracts need to be looked at. Lack of expertise, that's a challenge even the authorities are facing in Oman. We faced it in UAE and KSA, both for the government and for the businesses in terms of hiring internal experts or managers to implement VAT or hiring consultants, because we had faced an issue somewhere in October, November, where some of the companies started very late and we were helpless and we had to tell them no, that we don't have time to do it because we have committed to other clients. So from that perspective also, if you need to start thinking about VAT quickly. There is a requirement in KSA around having documents in Arabic. That's again a challenge from an ERP perspective. So that also needs to be factored in. UAE did start by saying that the word tax invoice on the invoice needs to be in Arabic, but they did away with that. So lesser challenge in UAE, but KSA did expect the entire invoice to be in Arabic. This slide is basically talking about some specific issues which could come across. For instance, there could be some provisions in the law which may not be suitable for a particular industry. For instance, the input tax apportionment, where you are providing both taxable and exempt supplies, you need to reduce your input tax. So from that perspective, the provision which is there in the law is not suitable for banks. So that is a challenge. Lobbying and seeking clarification. That's where again it's important that you start early. You are able to identify which are the issues which you could face challenge in terms of VAT, so that you highlight it to the tax authorities, to the government. You may go independently, or it's always better you go as an industry association and put forth your point so that you don't face any VAT challenge when it comes to actual implementation. We've seen some of the businesses taking VAT as just a finance impact, but that's not the case. It's impacting the entire business, be it your sale, procurement, strategy, IT, legal, HR for that matter as well. So you need to look at HR as in the VAT impact on the business as a whole. It's just not a finance impact. The other is around ignorance of law and procedures. Just to highlight, penalties in UAE and KSA have been very steep. Just to give you an example, in UAE, if your tax invoice is not correct, there's a penalty of 5,000 dirhams, which is 500 riyals per invoice. They've not implemented it yet, but I'm just giving you a flavor in terms of how penalties could work out. KSA just declared a penalty 2 days back on wrong filing of return or non-filing of return, which is ranging from 5% to 25% per month. So again, just to tell you, it's very relevant for us to ensure that we start early. Robust controls in terms of your system should be geared up in terms of calculating the right tax. Your system should be capable of ensuring that whatever taxes you paid on your expenses are captured as input tax, otherwise it's a direct cost to your business. So from that perspective, you need to have internal controls within your system, otherwise it's a direct hit onto your bottom line. Interpretation of law, again, this was another challenge we faced in UAE where the authorities were coming up with these guidelines and workshop, even post-implementation of VAT. But the challenge was the law said one thing and they were reading something else. So there was a difference of opinion between what position the tax authorities were taking and what the law stated. So we need to be very careful around that. In fact, in one of the sessions, the authorities were candid enough to say that we are not going to answer all your questions. Please go to your consultants. So I think that brings me to the end of my presentation. If we have time, we could take 1 or 2 questions. I think we'll take up questions during the break time. Thank you.
Thank you, Mr. Agarwal. I'd like to invite Mr. Khalid Ansari from KPMG Oman. Mr. Ansari has been working in KPMG Oman for the last 30 years, providing audit and advisory service to a large number of clients here in Oman. He's a member of the Institute of Chartered Accountants in England and Wales. The title of his presentation is Economic Realities 1 Year Later. Big round of applause, please, from Mr. Khalid Ansari.
Good morning. My presentation today to the corporate world and the guest. Last 2 years, just to give you a background, in 2016, OER had a presentation, oil prices at below 50. What are the challenges? Last year, the heading was New Economic Challenges. So I thought this year, let's update ourselves. What happened 1 year later? And where are we today? My presentation today is based purely on the findings and the results which have been declared by the top 20 companies in the OER listing. Later on, you will see what the top 20 companies are. So these information are purely coming out of the audited, disclosed financial statements to the public. And I'll just present on those numbers. So let's start off. What's the current economic scenario? This is what happened to the MSM 30 index. If you look at it, it's on a constant decline. These are the reality on the ground. Compare that with the oil prices. By and large, I've tracked MSM with oil prices. Both of them go in a similar direction, but there are obviously time lag. So since last year, the oil prices have increased, but the results have not been felt by the MSM yet, the top 20 companies. And there are a number of reasons for it. So that's the reality today. The oil prices are up, MSM index is down. If you look at the results of the top 20 companies in 2017, the total income went up by almost 13%. To 5.2 billion Omani Riyal compared to 4.6. So the year before was 6% increase from the year 16. So 6% increase, further 13% increase. The net profit went down, and that's 2 continuous years of a decrease in net profit. Just let me add a little bit of that 13% which has increased this year. That 13% includes a one-off Omantel acquisition also. So there's about 30% increase attributed to the Omantel buying an investment in Kuwait. So that's distorted the picture a little bit. But if you look at the spread, you've got financial services, 35%, which is a chunk of the MSM 20 companies. You got 15% companies which are petroleum, the 3 petroleum companies. Then you got 10% power, 10% telecom, 20% manufacturing, and 10% contracting. So it's a basket, it's a good mix and a good indicator of what the Oman economy is doing. If the top 20 companies are performing a certain direction, the rest, the mid-size and the lower companies can, work out their own. If you look at sector-wise, what has happened? Okay. Banking income has gone up. Last year it went up, this year it's gone even further. So the banking income in total is showing an increase of 17%. Contracting is a continuous dip. Last year was a dip, this year further dip of 10%. So that's a sector which is certainly suffering. All other sectors have shown an increase this year in their revenue. Petroleum has gone up 15%, manufacturing 9%, 29% telecom, 8% power. So other than the contracting business, all have shown an increase in their turnover, their income. If you look at their profit, the picture is a little bit different. Last year, telecom showed an increase. This year, all sectors have shown a decrease in profit. So the challenge or the message is that the profit continues to be under pressure in all sectors. Banking down, contracting down, petroleum down, manufacturing down, power 46%. Yeah. So that's the profitability. If you look at the banking sector, now banking on its own gives you a barometer of what's happening. Okay? The banking loan has increased by 1.4 billion, so the loans have gone up by 7%. The deposits went up slightly less than last year, 3%, 0.6. But the net profit in the banking has dropped. 2 continuous drop. A year before, 1% drop, this year 2% drop. The loan losses shows a little bit of a better picture. The year before, loan losses went up 11%. This year it gone up 3%, so slight improvement. I think in 16 a lot of losses were taken. Interest income has gone up by 10%, but interest expenses also gone up 29%. However, if you look at the banking sector, the challenge is that the interest spread is coming down. In 2017, the spread is 61%. A year before, it was 67%, and in 15, it was 73%. So the banking sector is definitely showing a pressure and a decrease in margins. So that's, a reflection of what the market is. The other barometer is the employment cost. Today's summit is finance and HR. So I'm just focusing on the employment cost. What has happened to the employment cost over last year? Banking sector showed an increase of 2%. So cost went up. Contracting sector showed a decrease of 3%. Obviously, a lot of people have gone and whatever. Petroleum, no increase in cost. Manufacturing cost has gone up 5%. Telecom has gone up. Power sector, no increase in cost. So the total employment cost in the top 20 companies is about 606 million Omani Riyal, as compared to 600 million of last year. So the marginal increase of 6 million only. Yeah. That shows the pressure on the companies as to what action they're taking. Now, a typical problem in organization, if profits are under pressure, which we have seen, there is a margin pressure, there's a profit pressure, what do companies do? The quick reaction is to cut cost. Yeah. Some of the, the points I'm going to lay it out today is similar to what I presented last year, but there's a slight difference. Challenges have moved a little bit. So what are the knee-jerk reaction? Okay. How do people manage in a downturn? The first thing people look at is, they look at cost cutting, but they do not see an opportunity in there. See, managers who see economic downturn as a threat in my view, are missing out on an opportunity, because every threat, every problem has an opportunity. So the mindset generally is, okay, my profit is coming down, I've got a return to shareholders coming down, what do? I need to cut costs. So there is a knee-jerk reaction, but they're missing out on a very golden opportunity, because all challenges has an opportunity. And that's what most managers should look at. That fine, the economic conditions are not that easy, it's tough, but instead of having the traditional knee-jerk reaction, can we look at other opportunities? Managers, by and large, the mindset are that they're looking for opportunities when times are good. I say that's a mistake. You should look at opportunity when there's a downturn. Okay? Because that forces organization and companies to look at how can I be better. If profits are rolling in, the focus of a general perception of the managers are, let's book profit, let's sell and book. People are not looking at opportunities to improve. Give you two examples. All of you must have heard about the lean methodology. Toyota, when it was hit on a downturn years ago, maybe 7, 8 years ago, it started looking at and went back to the basics. It's the largest selling the vehicles in the world, Toyotas. They went back to the drawing board and said, let's look at all those parts in the cars which are not critical to the user. Okay, there are so many things, a nice car here, there are a lot of things in it which you could do without. So they went back to the drawing board and said, look, can we eliminate those parts which are not critical to the user, not critical to the user safety and the pleasure? And they came up with this technology, a methodology called the lean technology, and they saved billions of dollars. Another company called Cisco, when the economic downturn happened, they used to have 1,300 suppliers. They were growing, they were buying from everywhere. When the economic downturn happened, they said, let's look at our procurement process. From 1,300, they dropped to 400 suppliers. In the process, saving millions of dollars just by consolidating and relooking at ourselves. They are the companies, two very good examples, where they did not panic and say, okay, let's shut this plant, shut that plant, scale down, lay off people. So that's how management in a downturn should happen. The critical factor is the management of HR. In any organization, you may have a good product, good market, but it's the people who make the difference. It's your HR, your human resource, which makes the difference. Yeah? So you as an owner or the CEOs, you should not, when you call your managers and say, look, don't give them tasks, cut costs. Ask them, how can you eliminate waste? There's a mindset difference. Cutting cost and elimination of waste is the same side, the two sides of the coin, but has a different mindset. It has a different implication for the users. And in a downturn, it is very important that you listen to your employees, because they are your assets. Set realistic goals, ask them, because they're the people who are going to be producing, ask them. And the worst thing is the fear of layoffs. Any organization which has a fear that, okay, tomorrow my job may not be there, tomorrow I'm going to close this factory, tomorrow I'm going to be, causes a negative impact. And that's what we need to avoid. And all of us need to handle our staff well now, when things are tough, so that you get a higher dividend when the good time returns. Because good time is going to return. You've already seen the graph going that way for oil. So hopefully it's next year when we talk, they'll be up on both sides. So HR is vitally important. From my perspective, what are the 4 challenges? I've got 4 challenges for the corporate world in the next 1 year. Okay. As a business leader, what should we be looking at? The first one is a cash flow. We all know in the market there is a delayed payment. It's across the board. Payments are getting delayed, contractors are getting less, more time holding. There is a flow. So that is going to continue. It's going to continue. With the banking sector, the collection will be a problem for the leasing sector, from contracting, but the worst one is obviously today. I don't have the data, I try to collect some data on the construction industry, but there's not much published data of what is the amount of outstanding in the market, what is receivable, how old are they. But looking at some of the clients we have, this is one challenge, that the delayed payment will cause a problem. The other one is income tax. Income tax changes were made last year. The base has been broadened. You have come across withholding tax and other things. Now government, if you look at the government budget, there is a deficit. There is a target for income tax to collect more. So you will see pressure on the companies. Tax authorities will try to broaden that. The third one is already, Deepak has already talked about, the VAT. Some of you think may not come. Next year, some of you think will come a bit later, but that's happening. So companies' value-added taxes will be the challenge. Companies have to look at it. The last one is the labor law regulations. Labor law, we saw this year, the ministry came up with certain regulations that, for employment. It will happen again, so the companies have to be prepared how to deal with it. That's a reality, we're facing it, and one has to adapt ourselves and come up with a plan to deal with it. In terms of overall, look at the economy. Today, if I take the top 20 companies and look at what is the net equity, it's come down this year. Last year, the net equity of the top 20 company was 5 billion. Today, it's come down to 4.6 billion, so there's a slight drop in there. The other interesting indicator is the market capitalization of these companies. Last year, the top 20 companies' market cap was 6 billion Omani Riyal. So it was trading at 20% above the book value. This year, it's dropped to 5.4 billion. So it's 17% above book value. And 3% have been shaved off, and that's evident from the graph you saw. Also, if you look at the revenue to net profit, last year was 14%. In 17, it was 10%. And the last indicator, the net profit to net equities, was 12% last year. It's dropped slightly to 11.7. So the companies have gone through a difficult time, and they're feeling the crunch. And that crunch should turn this year or the year after, but there is a crunch in the market. This is the top 20 companies. Think about the companies which are in the med sector. Think about the companies which are in the small sector. If top companies are very well prepared, they have the resources, they have the expertise, they have the financial depth, they have got banks to lend to them. Yeah? Think about mid-sector companies. Think about SMEs, people who are just starting off. What's happening there? To give you a focus, what should the corporate sector focus on? Okay. Revenue, last year was 4.6, went up to 5.2. Other cost was 3.4 billion. This year, the other cost has gone up. If you look at the employment cost, was 600,000, it's gone up to 607. Net profit was 600, it's come down. So effectively what happened, this slide tells you that companies have been able to hold the employment cost, but there are other costs which are not in their control has gone up. Okay? So companies were vigilant and reduce the employment, it's in your hand, but there's certain costs which are not in your hand, companies have not been able to hold. Now, what do companies do if you have a problem like that? There are only two options, yeah? You look at efficiency and you look at productivity. If you got your people, you already have a cost, make sure they're more productive. Instead of a man producing 5 units in an hour in a manufacturing, ask him, can he make 7 units? Put technology to increase that. So that's productivity. Something which is done in a certain time can come. And all of us, I don't need to go into examples and details, but all of you as managers of the company, if you look at, every company has some fat which can get rid of and increase the productivity. It's just focusing on it. And a downturn forces company to focus on that. Efficiency, there are various methodologies available. Efficiencies can be across the board. When you do procurement, when you do logistics, when you do purchases, when you do planning, savings are there. So a good manager would focus on these two rather than saying, okay, I've got a problem, what do I do? I'm going to lay off people. No. My advice is that, you got a good set of people, you got a good business, good company, look at how you can make best out of it. And it's common sense. It doesn't require, very detailed or very high level of intelligence or whatever. So to sum it up, how do you manage in a downturn when the economic situation is under it? What are the key focus areas? The first one I would say is to focus on cash. For companies, focus on your cash and your working capital management. If you manage your cash well, if you manage your working capital, you will be all right. The worst thing a company can do is to default on a bank or default on a customer, on a supplier, or not pay salaries to the staff. As a responsible managers, it's our responsibility to make sure that we meet our commitment. Because that's what differentiates a good company from not so good company. People who commit. And you'll be surprised, people who are paying on time, you're getting more credit. Banks are lending you more because you honor your commitment. So that's the first one. The second was to run a lean and efficient organization. Times are right, look at your organization internally and say, look, where can I improve? Where can I be profitable? How can I be more aggressive in the market? And the last one is to focus on people. Without people, you have no business. And that is a challenge in the market, that people don't give priority to the HR. And wait for the upturn to happen and make profit. And that's going to happen for sure. Thank you very much, ladies and gentlemen and excellencies.
Thank you, Mr. Ansari, for that insightful presentation. I'd now like to invite Mr. R. Srinivasan, CEO of Arabia Falcon Insurance, on stage. Mr. Srinivasan is a chartered insurer from the Chartered Insurance Institute of London. He has over 3 decades of varied experience in all aspects of the insurance industry, of which the last 24 years have been in senior managerial positions in the Middle East. The topic of his presentation is the changing insurance landscape. Please help me in welcoming him on stage.
Good morning, everyone. Excellencies, distinguished guests, friends. Insurance, like everything else, is dynamic. It's in a dynamic mode. Everything else is changing. So what are we facing every day keeps changing. And the key to efficient administration, running of an insurance, is to try and keep abreast of these changes so that we can run efficiently. Now, what we have seen, what I'm saying is what we see in the general insurance industry may not necessarily be Oman, in the region, in the area. Some are more relevant in Oman, some elsewhere. For example, crop insurance. We've been talking about crop insurance in Oman for more than a decade, but in 2017 it became a reality. Now we have in crop insurance product, we are helping our farmer brothers to have proper insurance for the products. If you look at India, for example, crop insurance being, from the time India was a socialistic economy, it has always been there. But in the last 3 years, crop insurance has taken from being a very low percentage to the number 3 after motor and medical insurance. Another thing which is gaining very large relevance over the Western world and slowly creeping into here is what we call cyber insurance. Now, what is cyber insurance? The definition is not clear. But if you put it simplistically, most of the policies, if you go and see insurance policies, will have an exclusion saying that anything which is related to cyber is an exclusion. Simply speaking, what cyber insurance is to write back that exclusion to give you the coverage. But it gathers more relevance for institutions like banks, for whom the entire backbone is the internet, the network, and the computers. For them, the threat is more, the preparedness is more and what you should be doing. And few other insurances, like as Oman is now embarking on really moving away from oil-based economy. One of the major sectors in Oman is looking at is travel, tourism, especially the inbound tourism. Now to have specially packaged insurances for tourists who are coming in to be made available here, that's the call of the day. That's something which is already coming. Credit insurance, we already have Credit Oman, which supports our manufacturing sector for their trade overseas. But what is gathering speed is credit insurance even within the country. Credit insurance being offered by traditional insurance companies. We probably have not seen a product, but we see product developing as we go forward. If you see how insurance used to be done, or even now how it is done, like if somebody wants a car insurance, he either calls his friend in an insurance company, or he looks at one of the brokers around, walks into an insurance company, or there are also salespeople who go around. Now, what is happening elsewhere, or in India, for example, is you have aggregators, you have internet-based. You click on the internet, you have the whole palette of opportunities available. So the whole shift is happening. The traditional man on the street with a suitcase having an array of products which he can sell is slowly disappearing. And you also have intelligent networks on the computer which are able on the internet for most of the companies who are able to guide you and to help you decide what you want. In fact, I was speaking to Mr. Venkatesh, our partner here. Recently he had bought he needed a sort of a life and savings product. So he went through the website of a particular company and then he started asking queries, and the computer was asking him queries from the other side. It was as though he was chatting as we chat on Facebook or WhatsApp. But later we do realize that the so-called person on the other side was actually an intelligent computer, or what we call a bot or robot for short. So these are traditionally replacing what used to be the call center people. Most of the call centers are managed by one big intelligent computer which has the capacity to handle 15 to 20 calls simultaneously. So you see how the whole paradigm shift is happening. There are no more call center with 100 people. You have an intelligent computer which replaces 20 people at a time. Similar thing, like also the sales, your servicing is also going to be system driven. It is going to be paperless. I remember 5-6 years back when I was in India, even at that time, this company called Bajaj Allianz, which is the joint venture of the German giant Allianz, retail motor claims, there was no paper, there was no interaction. If you had an accident, you reported it by phone or email, and you were asked to the system asked you to take the car somewhere and leave it there. And then the system allocated the surveyor to go and see. That is where the minor human interaction, the surveyor sees everything, uploads everything on the system. The claims manager sitting in the office approves the claim and the garage is approved. Automatically when the claim is, or the garage says the work is complete, the garage check is prepared, the surveyor bill is prepared, we check everything by system. 2 levels of interaction by manual, the surveyor actually seeing the damage and uploading the photo, and 5 minutes the claims manager reviewing the claims and putting it there. So more and more things are going to be automated system. Obviously, with all these changes happening in the products and the way the business is done, the management has to change, because you need to start looking at people who are well versed with this way of working rather than the traditional way of working. Because you're going to have new sets of people who are very familiar with this way of working. You have to be abreast. Are the companies already ready for these? No. At different levels, we are getting prepared, but the technology advancement is so rapid, it is far ahead, and the companies are still behind. And once this happens, the few people who are there are obviously going to be much in demand. Talent retention is going to be another challenge. Another major area where we see frequent or regular changes happening at a much faster speed. Many of my colleagues from the insurance company industry are here, would have seen some changes in the way solvency laws were calculated this year. Income tax laws are already changing, as Mr. Khalid mentioned. Income tax laws change, regulatory requirement laws change, capital requirement laws have changed, which the last year was the final year. So as things are changing, this will also happen. Now, in terms of legal, motor accident and motor accident injury cases are the biggest portion of the legal cases faced by an insurance company. Of late, we have seen more and more awards which are larger towards the benefit of the injured person. This obviously puts a major strength or major pressure on the way the insurance companies need to reserve their claims for. World is changing, weather patterns. Areas which never had rain are now having 4 inches of rain in 1 year, one hour. Areas which were traditionally fully green and fertile don't see rain for 6 months in a year. All this is changing. What happened in our own country here in Oman in June 2007, the cyclone, unprecedented. People said, oh, it's a one-off case, 1 in 100 years, 1 in 200 years. Unfortunately, to the day in 3 years, in June 2010, we had a second cyclone. It had a major, major impact on the industries, the common man life, and things like that. And now, people are no longer having a huge computer in a server room with a huge bank of IT people working on them. Everything is on the cloud. So what risk does it give to the people? Not very sure. Along with this comes, once you are on the cloud, you don't have necessarily any control over what is happening. Comes the other risk. How much is your data safe? How much is your data private to what you have? How much of your customer data is what you have? Political violence, thankfully, we don't see much of it happening in Oman. We saw a brief glimpse happening in the beginning of 2011, which sanity prevailed, nothing happened. But elsewhere in the region, not far from here and a little far from here, we have what is called political violence. Political violence is what we in insurance parlance determine or define as something which is something lower than a civil war, but something bigger than a normal riot or something which happens in a street corner. This is gaining, and the insurance related to political violence is also quite gaining thing. What I have done here is whatever I spoke the previous, these are all quite summarized. For example, the claims management, we already spoke. Incident management, there is no need to go to an insurance company, stand in queue, sign a claim form and say this is what happened and then give photocopy of your policy, everything. All you need is to log into your mobile app and put your, scan your car registration card which has the policy number, everything gets automatically done. Policy sales, we said, reserve calculation. What we call as reserve in an insurance company is whenever we have accidents which are not settled, we have to provide for the liability. That is what is called a reserve. Similarly, we issue policies all through the year, and at the time of calculation of your annual accounts at the end of the year, there are a lot of policies which are still valid for the next year. So we have to make a provision for these. What used to be done, or what is being done currently, is you have a team of actuaries and financial accountants who calculate using different methods, and then it's a long drawn process. Once everything is on the system and algorithms, your system is going to determine at the press of a button what is your liability. It will perfectly tell you what it is. Similarly, reinsurance. Reinsurance is what an insurance company resorts to protect itself. Well, obviously, when I, as an insurance company, write a big factory of 100 million reals worth, I'm not going to insure the whole 100 million on my balance sheet. I will resort to reinsurance company who we can equate in the banking parlance as the wholesale bankers. So the retail bank issues a 100 million loan. He goes back to the wholesale bank to get back-to-back support. This reinsurance is a huge separate department which calculates how much we can retain, how much we can reinsure, and then go and arrange reinsurance. I was reading yesterday a new development which is taking place is the major reinsurers in the world, Munich Re, Swiss Re, and few others, they are joining on a platform which is on blockchain, by which all of them are interconnected. So anything that is done will automatically, seamlessly happen, the reinsurance, the connection, the accounting, everything. So no more a major reinsurance department working on this. Similarly, fraud risk determination required experts, expert underwriters, expert fraud examiners to be there. Now the system, by intelligent evaluation of data and what is collected over the period from various areas, is able to immediately flag that this particular transaction appears to be fraudulent, check that. So all this is what is going to happen in the future. Is the insurance industry, are the people who are insuring prepared for it? Are we doing all this? I'm not sure to what extent. But if we have managers like this in the next slide, I'm sure all of us can be quite easily ready. Thank you so much, ladies and gentlemen.
Thank you, Mr. Srinivasan. I'd now like to invite on stage Ms. Ghadir Hassan, Portfolio Manager, Asset Management, United Securities. Ms. Hassan has over 12 years of work experience in the regional financial market, and prior to joining United Securities, she worked with Oman Arab Bank in the investment management group as a financial analyst in its corporate finance department, dealing with IPOs, rights issues, and private placements. The topic of her presentation is Initial Public Offering Contribution to Muscat Securities Market. Please help me in welcoming Ms. Ghadir Hassan.
Good morning, everyone. It's nice to know that I'm the only female speaker today. So my topic today is about IPOs in Muscat security market. I'm going to be touching up on some of the information Mr. Khalid talked about. A brief introduction about Muscat security market. It was established by a royal decree in 1988. It was the first in the region to create a separate and independent regulatory capital market authority. Both local and foreign companies are permitted to be listed in Muscat security market. The minimum capital for listing is 2 million Omani riyals. There are three major sectors: the financial, services, and industrial sector. The MSM 30 index covers more than 65% of the total market capitalization. Trading parameters of the Muscat security markets. Over the past 5 years, both volumes and the turnover are declining, while on average, the market is still providing a 5% dividend yield return. Shareholders are losing interest to trade in the market. Local investors are moving to more defensive investments. Foreign investors are shying away over the past few years. Companies' profitabilities their profitabilities and margins are either stable or they're continuously declining. It has become more difficult for SAOG companies to operate. Especially this has been reflected in small capital companies. The banking surprising profitability over the past 10 years has doubled though. Reasons? Less expenditure from both government and private sector due to oil price decrease. The banking are offering high fixed deposit rates, so people are moving to fixed deposit than actually investing in the stock market. Small capital companies are being held by promoters, HNI clients, financial institutions. So that's why we're seeing the trading volumes over the years declining. Well, looking into the correlation between MSM and oil prices, there's a strong correlation both with the MSM and oil. But recently, we've seen this correlation moving in opposite direction. Oil prices has gone up, while the MSM is still not gaining momentum. I've broken this graph into 4 phases. The first phase was supported by oil price and infrastructure boom from both the government and private sector. The second phase was a stable and positive markets. Oil prices were still in a bound range. The third phase was the second half of 2014. Onwards, there were declining oil prices. That was a wake-up call. The budget started being in a deficit. The fourth phase still remains a challenge. Prolonged stagnation of oil prices. We're still yet to see the spending on infrastructure from both the private and government sectors. How can IPOs help? Well, The market is very active in terms of IPOs. In the past five years, we've seen 14 companies being listed, both small and big capital companies. We had 6 power companies and utilities, 5 insurance companies, 2 takaful companies, and 1 ceramic company. Now, when we talk about IPO market, it's not actually promoters giving out their shares to the public, but it's actually companies actually wanting to start up and list. From these 14 companies, only 1 company actually came to the market with a par value. So does the size of an IPO matters and the sector it is? Yes, it does. High trading usually are seen in the initial public offerings, but as time progresses, the trading activities in these companies fade off. Large companies still contribute to maintain high trading activities, while small companies are either being held by promoters, H&I, financial institutions. So these, actually, the trading volume starts diminishing. From the 14 companies which were listed, 11%, up to 2017, they contributed 11% of the market turnover, with majority contribution coming from large companies who have high base capital. So basically, in 2013 and 14, large capital companies, and yet we've seen them in 2015 still contributing to the turnover of MSM. Same thing in 2015, large capital still contributing in 2017. Going forward, the advantage of large company, not a single investor can allocate large sum of money to a single stock. The pricing plays a very important role in the success of an IPO. Companies' projection in this prospectus as well plays an important role. Management interaction with investors and giving future projections. This shows us how a determinant of a successful IPO. The size of the IPO matters, the pricing. So an IPO shouldn't be coming with a high premium, because as we've seen lately, high pricing fails the IPO. The company has to have a stable. Investors who are willing to invest need a clear dividend policy going forward. Also, does it have a direct or indirect contribution to GDP as well plays an important role. So the sectors in MSM, we have 3 major sectors, but if we actually break down these sectors down, we actually have 21 subsectors. The main sector is the financial sector, which actually contributes 50% of the banking, 50% of the financial. 37% is actually banking from 8 stocks. The service sector contributes 41%. Both the telecom companies and the energy company each contribute 13% of the market cap. While oil is the main GDP distributor of the country economy, it only contributes 4%. The industrial sector contributes 9%. We're currently missing the main GDP distributors in the economy, such as mining, manufacturing, tourism, logistics, real estate, wholesale and retail trades, oil and gas and its services as well. To conclude, we're expected actually the primary market to be very active up to 2021. Government plans to divest its stakes through IPO. Within the 2 to 3 year predicting of downstream oil companies, petrochemicals, utilities to get listed in the market. OPWP sent a report out saying that 4 power generation companies, 2 distribution, 2 water distillation companies within 3 years. But since 2004, there was no hydrocarbon or petrochemical IPO. The last was Al-Maha Petroleum. There is a general improvement in the market condition. There's a positive sentiment, and we've seen that witnessed in the GCC market. The number of IPOs since 2016 and 2017 has doubled. So the IPO market is expected to pick up. Currently, we are a $70 billion hydrocarbon-dependent economy with a stable government, one of the fastest growing economies in the region with very low levels of inflation, conscious effort to promote non-hydrocarbon activities to create a balanced economy. The government diversification is expected to pick up, and some of these will have a direct contribution to GDP. New laws are expected to come out, or the current laws are expected to ease off to attract more foreign investment in the country and to encourage SMEs as well. The decision to partially sell off these organizations to the public will help the government to actually increase efficiency and productivity as well. It will also help the financial burden on the government by sharing the management and cost, by sharing it with the public. There are over a dozen companies in Oman that can be explored to offload its share. Some of them are the main sectors: the pipeline, logistic, manufacturing, tourism, transport, mining, airline, education, and real estate. Thank you.
Thank you, Ms. Ghadir, for that insightful presentation. It's now time to present the OER Finance and HR Awards. And to do the honors, we would like to invite on stage His Excellency Sayyid Salim bin Salim al-Busaidi, Undersecretary of Administrative Development at the Ministry of Civil Services. I would also request Mr. Saeed Masood Mashani from UMS to join His Excellency on stage. Okay, so the first OER Finance and HR Award goes to a company which exemplifies the spirit of giving. The insurance provider set aside 1 Omani Riyal for every policy that it signs and has been able to raise funds for charities like Dar al-Ata and others. The company has incorporated sharing as a core value. The OER Finance and HR Award for Excellence in Corporate Social Responsibility goes to Takaful Oman Insurance Company. I would like to request Mr. Mohammed Haddabi, Vice President of Takaful Oman, to please come on stage to receive the award. Congratulations to Takaful Oman. The next OER Finance and HR Award goes to one of Oman's largest financial investment advisory and securities businesses. The company uses a systematic approach that not only ties in valuations with sentiment, but also uses a thorough research process that identifies possible opportunities. An investment approach that links identifying undervalued businesses and market leaders is applied. These have helped the company in creating consistent value for its client. The OER Finance and HR Award 2018 for the Best Innovative Broker goes to United Securities. I'd request Mr. Mustafa Salman, Chairman and CEO, United Securities, to please come up on stage to receive the award. Big round of applause for United Securities. The next award goes to a group that has over the years consistently contributed to the vision of a positive and result-oriented Omanization campaign in the Sultanate throughout their unified efforts. Hiring Omani talents is a large part of the group's contribution towards Omanization. The group surpassed its Omanization target set for the year 2017 by hiring 15% more nationals than its stipulated target. Moreover, it has already achieved approximately 30% of its 2018 recruitment targets within the first quarter of the current year. And it's expected to not just complete, but to outdo all of its 2018 Omanization targets as well. Yet again, OER Finance and HR Awards for exemplary contribution to the national vision of employing and developing Omani talents goes to Al Tasneem Group. I'd like to request Mr. Hakim G, CEO of Corporate Services, Al Tasneem Group, to please come on stage to receive the award. Oh, the whole group is coming. Perfect. That's great. A big round of applause for Tasneem Group, please. The next award goes to an insurance company which offers its products through multiple channels, including banks. It has recently entered into an agreement with Bank Sahar to offer its life insurance products to accommodate a broad spectrum of lifestyle and market demands. The company delivers a range of 5 lifestyle plans, multiple payment tariffs, and options for immediate activation to suit various requirements. The OER Finance and HR Award for consistent quality insurance services goes to Arabia Falcon Insurance. I'd like to request Mr. Mohammed Al-Awaisi, Senior Manager, Arabia Falcon Insurance, to please come up on stage to receive the award. Big round of applause, please, for Arabia Falcon Insurance. Thank you, Your Excellency, and thank you, Mr. Saeed Al-Mashani, for doing the honors. I'd like to request you to please take your seats. Congratulations to all the winners. So it's now time to start the first panel discussion of the day on financial preparedness for harnessing growth. We have a stellar lineup of panelists, and to take forward the proceedings, I'd like to welcome on stage our moderator for the discussion, Mr. Nad Vora, CFO of Gulf Energy. Now, Gulf Energy itself started off as an SME 10 years ago, and now employs about, if I'm not mistaken, I don't know if I'm getting the... Well, a lot of people at the moment, and is going to be listed on NASDAQ very soon. So from an SME to being one of the companies listed on NASDAQ, that is an achievement on its own. Mr. Vora has served in senior finance positions in Oman Methanol Company, Walmart Canada, the Toronto Star, Bell Canada, and a lot more. He leads the structure of an equity finance deal for Gulf Energy, which was nominated as the Deal of the Year at the Treasury Awards for 2012 by the Association of Corporate Treasurers. Please join me in welcoming Mr. Vora on stage.
Hello, everybody. Good morning. I'd like to start by, first of all, thanking His Majesty Sultan Qaboos for his astute leadership, vision, and for creating an environment in the country where the people from varied cultures, diverse customs come together, work together, learn together, and thrive together. I'd also like to thank UMS for organizing this panel today and giving us all an opportunity to share the expert knowledge of the esteemed panelists who are going to join us here soon. I'm going to go on and invite my friends on stage now. We'll start with Flavio. Flavio Simonetti is the CFO of Umran Group of Companies. He has a vast experience, over 20 years in project and structured finance, worked with companies like TDIC in Abu Dhabi, and he has experience in infrastructure development and real estate financing. Next, I'd like to welcome Loe Atene, CEO of OER Capital. We don't need to say a lot about OER Capital, right? Loe leads, it's the biggest investment firm in the country. As an investment group, at the Oman Arab Bank, he founded the investment group. He's an accomplished banker, and I can go on, but I got to get other people on stage as well. So thanks, Loe. I'd like to invite Mohammed Sadiq Suleiman, who's the General Manager of Corporate Planning at ORPIC. Mohammed is an investment professional who's worked in Oman, worked worldwide. In Oman, he was a part of Tanmiya, and he was involved in establishing Asas, Takaful Oman, and many other Omani companies. He's participated in financing of the first major non-recourse real estate development and the first UAE mutual fund. So thank you, Mohammed. Next, I'd like to have on stage Rajesh Khanna. He's the Group Finance Controller for Waltam. He has vast experience in finance, controlling compliance of over 29 years, 16 of those years as leader. And he's worked in esteemed companies such as Alstom T&D India, UEM India, and Arriva. Thanks, Rajesh. Would like to have Sanjay Quatra, for the partner assurance from ENY here. Sanjay, as I said, is a partner with ENY Oman, and he leads the assurance arrangements. He's an expert on IFRS and EY's MENA part of the ENY MENA technical executive team. And he runs some of ENY's successful public forums and works closely with the regulators on various matters like VAT and IFRS. And then Vishal Goenka, CFO of Renaissance Services. Vishal is, of course, well known again in Oman. I don't have to say a lot. 20 years, he has, before Renaissance, he was with one of the largest business houses in India. Renaissance has done very well, in terms of listings and having one of the first perpetuals in Oman. Am I right, Vishal? That was the first one? So once again, thank you guys. Thank you everybody for being here. I'd like to thank the esteemed dignitaries that are here as well. And what we're going to attempt to do over the next 40 minutes, if I understand right, is to try and extract as much of the expert experience from these guys and see, in terms of where we stand with businesses, economies, and what are the ways we can use the progress or the opportunities that present themselves right now to harness financial growth. On that note, one of the things that a lot of us would have read recently would be the IMF report that came out recently. There were quite a few positives in that report, mentioning the steps taken by the government to change the regulatory environment, to enforce some structural reforms, especially, removal of some subsidies, which really at the end of the day, by not totally removing them, but by restricting them, helps manage fiscal spending. Some of the concerns that IMF referred to in their report was, again, with more to do with structural reforms, how to deal with productivity and competitiveness gains, diversification, really important job creation for nationals and tackling labor market inefficiencies, improvement in training, education and training, and improvement of the overall business climate. OMF, one of the positive things that they did say that they expect the fiscal deficit to come down to about 4% over the next 2 years. And I'd like to ask Mohammed here to start with, what does he think? What are the key factors that we need to look at and address to address some of these concerns?
Thank you very much, and good morning to everyone. I think that it's very important when you begin to look at a report like that and the kinds of reforms that come out of it, to differentiate between short-term, medium-term, and long-term reforms, because they tend, in my view, to be very different in nature and different in type as well. And so I think if I can look at it from that lens, it'll be helpful. The short-run reforms that have taken place in the last couple of years, in my view, have been very effective, and I think have addressed the short-run issues quite effectively. And I think we've seen that in some of the data that you mentioned. When you look at the medium and long-term adjustments that the economy will go through, and that change is a process that is a constant in any economy, it's very important that, from my view, to continue to monitor how the progress is on the medium and long-term front, in terms of structural reforms, in terms of reforms, not only, as you said, to the on the issue of subsidies, on the issue of labor market reforms, on the issue of capital market reforms, on the issue of all of the different types of reforms, how they play out over the medium and long term, and how they are sustained over the medium and long term, those reforms, and how the impacts of those reforms in the intended policy consequences and the unintended policy consequences over the medium term and long term will be very important to how I think you see the different pictures put forward by the IMF might play out, whether you look at some of the, and again, as Khalid mentioned, clearly market conditions play a big factor in this, so I shouldn't get away from that. Market conditions have improved and will continue to improve. And it's important as well, I think, to keep an eye on these reforms regardless of market conditions. Whether they're up or down shouldn't distract from the need to ensure that the kinds of structural reforms that are needed continue to take place over the medium and long term.
And I'd actually like to pass it on to Loe, who's quite keen to get into on that conversation, as to where do you see, how do you see the businesses and capital markets contributing to take care of some of these concerns that we have? I mean, more than us, the IMF.
Thank you. Good morning, everybody, and sorry to be late. Actually, as mentioned by Mohammed and others, the reforms, actually, I would like, just before I answer, last 10 years, we've been through 3 cycles. Usually, cycles take 6 to 7 years, but I admit officially that it looks like we've been through 3 cycles or 3 phases. Phase 1, which was 2008-9, where we had that global financial crisis, and most of GCC countries, including Oman, they were passive. They were just like firefighting, and they continue as is situation. And I'm not, maybe we say now it's correct or bad, but maybe in that, if I were in that shoes that time, I will do the same. Phase 2 was in 2014, when there was huge decline in oil prices, and there was big debate through different schools. Shall we continue spending? Shall we continue to do as is? And also we need to create jobs. And again, the surprise that, frankly, they went to a different direction. Of course, they have to create also jobs, but they came late to the market to cover or to fund the deficit. And again, another surprise that the deficit was not as been budgeted, also the deficit was above the budget. Means, again, this is one of the rating agencies took it seriously, and we've been punished, I can say punished as analysts for that. In 2016, actually, we start to see a lot of reforms, including removing or restructuring of the subsidy. We don't once say it, remove the subsidy, it was restated or restructured, introducing a new tax and basically fees, introducing VAT. Again, I need to say something. It was very smart also move from the government of Oman to move the VAT implementation to 2019, because I just back from basically a couple of countries. They are really suffering. Countries who start introducing VAT at early stage. I think this is a good opportunity to Minister of Finance to get lessons from neighborhood countries. Go back to capital market. Because of the downgrade, which we received in 3 levels, and the last one, which is the most severe one, especially when they were downgrade on local currency, which is something, it's not hardly to digest sometime. With other things came at the same time from basically other agencies. I believe the downgrade, I personally, this is what I said 2 days back in one of the conferences, I should not look at rating at this point of time, because frankly, we cannot do a lot in rating.
We shall address the rating. I'm going to get to that.
But
yeah.
Yeah, sorry, but, okay, sorry. But basically, we need to reform existing market, do a lot of changes in order to attract FDI. We need to introduce new rules and regulation to meet the new situation. Basically, we need foreign currency, we need foreign investors, we need to open markets. My colleague Ghadir, and we work together, and she's a friend of mine, she mentioned about IPO and MSM market and how the volumes and turnover went down sharply last 5 years. This is frankly represent something which we need to take care. Even the IPOs, which were mentioned out of 14 IPOs, 5, it's by the law, again, actually it's not 5. 5 insurance companies plus 6 power companies, by the law they have to go public. It means that only 3 IPOs went public. It means the primary market activity is not up to that level.
And this is one of the reasons I wanted to talk a little bit about the capital markets, right? We all see capital markets as a driving force to make businesses, better, try and have new business ideas to germinate. I'll take that to Flavio. Flavio, you work in the tourism industry with Omran. How do you see that, tourism is one of those things that's talked about as a huge potential for the future, for diversification of the economy from overdependence on hydrocarbons. What do you see over the next few years could be done so that tourism becomes a major contributor, and how it help the overall scenario?
Thank you for that. Good morning, everybody. I think everything is effectively related to the same discussions. IMF rating agencies, I think they have the tendency of stating the obvious. And it all depends from what perspective you want to analyze the situation. Whether it's tourism, manufacturing, or any other element of the economic cycle, everything has to be seen as an holistic approach. When it comes to tourism specifically, obviously it's not helpful to have reports by international agencies or authority that have that tendency again to prescribe the same medicine to the issues that they assess. So it's a matter of kind of coming down at the country level and see what can be done and what people are doing, what is reality like. I think it's you cannot question the level of initiatives and reaction the authorities of the government have been triggering over the last few years to incentivize business activities, SMEs. So there's a lot of push from various directions. And from where I sit, my impression is there's still predominantly government, public sector-led type of programs, which are helpful for the context of the Oman economy, but at the same time, the private sector is where the hope lays for the future years. So when it comes to tourism specifically, companies like Omran have been established for the purpose of enabling a lot of the investments and various programs and projects. But we're not here to compete with the public sector, with the private sector. We're not here to compete with the private real estate developers who are looking at opportunities. So the hope is that there will be more of a private sector involvement, private sector mindset of taking the right risk, measuring the right risk, and that is probably all related to the SME topic that I think is one of the topics you wanted to discuss later today.
Thanks, Flavio. Vishal, your group has been growing quite rapidly. You've done different things, diverse things. You've been in the markets. How, similarly as what Flavio was referring to here, how do you think more private sector involvement would work for things like, more job creation, improving the business climate?
Assalamu alaikum, and thanks, Ned. So first of all, thank you for saying that Renaissance is growing, because many people over last 3 years, because of the oil prices, what happened, that we didn't grow so much. But in 2018, we are certainly growing, So when I look at IMF report, credit rating, push to private sector, all are good. But this is very much in the journey of a country. What good I want to take it out for private sector and also for the country, that IMF mentioned in their recent report that our banking sector is really sound. Our NPAs are lower. And what we need to do is not the rocket science. We need to plan it properly. We need to do more program like Tanfeed, but just doing the program won't help. What we need to do that we start executing there. So what is happening at the backdrop is fine, but whether that benefit is going to the last guy in the queue, that's very important. And that's where private sector is going to play a key role. In His Majesty's vision, he clearly articulated that private sector is going to generate the maximum employment. And if there is no business, then there is no tax, there is no VAT. What we need to do is really complement the private sector. Do that communication properly. And I think the way we did in Oman over the last 3 years with all these cyclical of oil prices, I think as an Oman and private sector we did well. And recent absorption of 24,000 people out of 25,000 push from Ministry of Manpower within private sector and other sectors is a great example that when the challenge comes, we can take it. And we will do it. So banking system is strong. We need to just get together, communicate more, and embrace it. I think we will come out very successfully. We are all set, but just we need to plan it a little better.
Thanks, Vishal. I can see my friend Rajesh is very keen to get in on the conversation. So Rajesh, go on.
Yeah, good morning, everybody. I would like to talk about what challenges at the current time manufacturing sector is facing. And so basically, if when in the good times, when we compare our balance sheet, and if we see the cost of financing, which was very low at the time when interest costs were lower, the oil prices were good. And if we try to compare the same balance sheet with the other countries, with, for example, India or any other country where the cost of financing is high, could be the very good company here might be a mediocre or a non-performing or very low performing in India or any other country where interest cost is high. So we did not feel that pressure at that point of time, but at this time we are feeling that pressure because cost of financing is going high, because of oil prices, the projects have gone down, and all that is posing a challenge on manufacturing that how to sustain. So here the key comes down to identify your limiting factor in whichever manufacturing you are, whether you are, your limiting factor is machine hour rate, or it is a man hour rate. So it boils down to your productivity. How do you improve your productivity per unit of your limiting factor? And then how do you sustain your pressure on working capital? I think these are the two challenges with us, with all the finance professionals in manufacturing industry, to see that in future we could sustain this pressure.
Great. That was great technical analysis for what problems we all face as businesses. Sanjay, I wanted to take you on those specific points. That's why I left it for the end. Was some of the concerns also from IMF was the reduction of excessive regulations and acceleration of the Tanfeed implementation. Since you're closely involved with a lot of initiatives with the authorities, I thought you might be able to just throw some light on how we could allay those.
Good morning, everyone. Thank you, Nat. I think overall, before we go into specifics, I'll just like to talk about, few basic numbers for us to understand, things better. I think first of all, let's look at, what's our problem. I think we are all aware it's over dependency on oil, as a source of revenue. I think that's putting a pressure on us. And then I think with whatever has happened in the economy, if we break it into different cycles, I fully agree with my friend Lloyd that oil cycles have, I myself have seen 3 of them in my last 18-19 years in Oman. But effectively what has changed, I think the overall cost has increased quite significantly between the cycle we had between 2011 to 2014. I think that's the time where really the public spending has gone up quite significantly. And that's what something is currently, worrying the rating agencies and whatever we see coming up from IMF as of now. I think subsequent to that, there has been a significant progress being made. Our 2016 deficit was around 5.6 billion Omani Riyal. This year, we are talking about 3 billion deficit, which is a 44% reduction, yes? So 2 components on that. Definitely one is the oil prices have improved. But having said that, I think there is a significant progress being made in terms of the, in reducing the expenditure, which is also quite evident, and that's coming up from all the reforms. I think from the government perspective, maybe we have reached to the stage where you cannot have any more spending cut because it is going to impact things quite significantly, be the development, infrastructure, as well as, the social objectives and environment within the country. So it has to be, balanced very carefully. And that's what currently the rating agencies are looking into it. They always say there has been a significant progress made, by the country, but effectively, they look into it, what is going to hinder, the further spending cuts. So I think we need to go back and look into things like Tanfeed and various other reforms and initiatives which have been introduced within the country. Again, I think one more thing I would like to say before I go and answer that question, because I think it's very important for us to understand. When we were working with our clients, I think 2016, I will say the liquidity position in the country was really very tight. We were all concerned that time. Next year, it eased quite significantly. And I think when we look into currently, if you really look into the dollar liquidity, I think we are quite comfortable. We have seen, during the beginning of the year, the government went out and they borrowed around, 6.5 billion. So effectively from the deficit financing, that's all done for the year. So I think these are all quite good progress being made. Now coming down to other things in terms of the various initiatives and how the things are going to be implemented. There are 5 sectors which have been identified, during the Tanfeed program, and I think we are all well aware of it. Tourism, manufacturing, overall, whatever we have looked into it. There has been a lot of discussion on that. Many people, many of you would have definitely contributed in working out that program. So everything went on quite, fine in terms of the initiatives coming up. What we really need to see now is the actual implementation. That requires a little bit more push. I think that's what I can talk about. That's definitely something is required. Apart from that, we can see, I think we're going to definitely talk about the SMEs and the way that other job creation. In terms of the reforms as well, we are seeing, the government coming out, like, the central bank has relaxed certain, regulations during the year in terms of the capital adequacy for the banks. That's a major shift, when you really look into it. That allows the bank to lend another 2.6 billion reals, yeah? That's going to go back to the sector, that is going back to all the sector for us, to basically, you will have more liquidity available. You have got appetite to basically the appetite for the banks to lend, and then basically, it gives ability, for all other sectors to basically utilize these funds. So that's again, these are all very, very positive things. It will take some time, before we will start realizing all the positive impacts of these. Yeah.
And I agree. Actually, in the recent times, we've seen some really good initiatives from CBO, which nobody actually mentions a lot. So I'm happy. Thank you very much, Sanjay, for bringing those up. One of the other things that he mentioned about that ratio allowing higher lending by banks, what it actually allows the bank to also do is spread their pricing over a larger base, thereby not having a major impact ultimate pricing. And if my mathematics is wrong, please correct me there. Actually, I had a separate question on ratings, but a lot of people addressed the ratings issue in this. My only comment on the ratings is, look, both IMS and if you look at Moody's, one of the concerns they've had was the stability of oil prices. And being in the oil and gas sector, we're used to it, right? We know it's ingrained in our DNA that volatility in the oil prices is a given. To deal with it, one of the things that concerns me though, and here, I'd like, again, Mohammed to see what his view is on this. We haven't seen, the impact in the oil prices, of course, a slight improvement in demand, but it's also the tightening of production by the OPEC and for a long time, in collaboration with non-OPEC countries. But we haven't seen the impact of a pickup in the North American market, right? From my personal information and data gathering, as we all know, the North American market is more reliant on debt. These are smaller services. They're not like the Middle East where, your clients are large national oil companies, or IOCs, international oil companies. They're smaller groups. Debtors who took like big hits when the market went down, are not yet excited about the market, and that's why there hasn't been an uptick in the shale production. But 2018, there is expected to be about 35% increase in spending in the US. There is expected to be about 10 to 15% increase in spending in Canada. What do you see, as the impact, and what will happen if the oil prices were to kind of not sustain but go down?
Well, I get the easy questions, right? The oil markets, the way I see them, in this new environment, because if you look at 2007, U.S. production was something like 4 million barrels a day, and U.S. production went from something like 4 million barrels a day to something like 10 million barrels a day within 7 or 8 years. And that was a major shift in the supply economics of oil in general. In addition to that, obviously, demand growth did not keep up, right? So what you saw in 2014 was the culmination of a wave that was coming for quite a long time. And one of the interesting things to me as an economist was to see that markets didn't respond gradually to that they responded with a single price shock, which is exactly the way it has been since 1972. When you look at the way price shocks, or supply-side price shocks, I should say, have translated through the transmission mechanism into the oil prices. So what I mean to say is these things don't happen gradually; they happen very suddenly. That's a simple way of putting it. The changes in the oil markets. More specifically to your question, though, I think my impression of what's going on in the oil markets now is, again, and I come back to the first answer I gave, again, a long-term and short-term thing. The short-term supply-demand economics are relatively straightforward and they're relatively clear. OPEC has cut production. U.S. production has been hit by the increasing cost curve in terms of what it's been doing on the shale side. The equilibrium price that we're seeing today, more or less the band in which the equilibrium price has been trading in the last year, I would imagine, I think reflects basically the marginal cost of shale production in the U.S., and that's really what's keeping a ceiling on that price in the short run. But I think so that analysis is all reasonably, at least in my own thinking, reasonably clear. I think what is very unclear and very difficult for the markets to digest and to price properly, and is definitely difficult for me to digest and price properly, is what is going on in terms of the structural demand for oil in terms of its contribution to the total fuel mix over the longer term. So over 5, 10, 15 years, how much will renewables eat of the oil market? Now, there are all kinds of different views on that. I've read recent ones. I've read many of them. I have my own views on it. But I think that if you ask me what will determine the direction of oil prices over the next few years, it's really what the market collectively takes as a call on that renewable space. It's not what's going on in the short run. What's going on in the short run has already established a market equilibrium, but you could say between $55 and $70, with 70 being a bit on the high side given some of the very recent changes, and 55 being a bit on the low side because that apparently is exactly where the marginal cost shutdown decision is in the United States. So that band to me is reasonably clear. What would cause it to move outside that band, I think, is some of the more long-term dynamics that you can see at play.
Thank you, Mohammed. You know, as we were having this discussion, a consistent theme, whether it was job creation, whether it was business competitiveness, whether it was improvement of business climate, was SMEs, right? We keep hearing this SMEs and development of SMEs. Now, just to give you some statistic, worldwide, SMEs account for about 70% of employment. And that too, job creation must be much higher because the bigger companies are not really hiring today. So for SMEs to be 70%, the job creation must be much higher. Now we have this opportunity here in Oman, how we could harness that, right? Some of the other things which I look at is basically in Oman, we have a very vibrant young culture that is excited about innovation, that is excited about entrepreneurship. What we need to do as government, as authorities, as businesses probably, is to provide them with the right resources and tools. And one of the things that I've always said in startup growth, right? Startups are risky and they have very high turnaround. Like the failure rate is high. It's not because the idea is lacking or the idea is not excellent, because these technocrats, they are absolutely brilliant technically. They have the most exciting and amazing of ideas. Where they lack is good, sound, financial, strategic, and business advice. The big corporates can afford CFOs and stuff like that, but the guys who really need it can't afford it, right? How do we bridge that gap? That's one of the things I see: mentorship, guidance, maybe greater financial handholding that we could do for them. And most SMEs, what their biggest concern, right, is a lot of the regulations, a lot of the rules and customs are set based on business environment for the larger corporates. The younger, the SMEs, the startups are not equipped to deal with these high level of regulatory requirements and stuff. So what we can do to tackle this. Now I'm going to give this to Sanjay first, and then I'm going to add a corollary to it and then go to the two industry guys. But Sanjay, what do you think? How could we take advantage of what we have and really extract the maximum potential from the SMEs to be the future of Oman, to be the growth, to be that factor which basically takes away higher reliance on hydrocarbons and pushes us towards a more structured, more stable, diverse economy?
Yes, I think that we have been, discussing this matter for now a couple of years, and I think it's a very common discussion topic which we have on various.
It's my favorite one as well.
As well, but in a way, still a lot needs to be done. I fully agree with you. As in terms of the job creation as well as the contribution to GDP, I think in not only in Oman, within the region, the contribution is very less. It's very less. If we compare ourselves to economies like Singapore, it's their contribution from SME is actually in excess of 90%. That is how it works. So it's very different compared to what we have. So we really need to look at what our issues are and how we can handle them. I think one very important point which you talked about, for corporates and businesses, we all have got various corporate social responsibilities and we do various things on that. I think the easy bit to do is basically, where we contribute in cash. That's the most easy way to do it. I think effectively it's, as a part of the culture of all large organization, one thing which needs to be embedded within our culture is basically, people should move forward and say, I'm happy to, do a mentoring, which is the most important point you talked about. I'm happy to pick up, two young guys who have just started something very new. They want guidance, be it finance, be it in terms of marketing, technology, whatever, because they don't have that many avenues and sources available for them, where they can reach out and do that. So I think if all of us start doing this, one person, one-to-one, it will not take much of time, but I think it's going to be a major corporate shift in the culture. If that happens, that is going to be very, very useful, and I think from the corporate social responsibility as well as overall development of SME sector. I think other thing which we really look into it is we talked about the financing. I think from financing side, we have seen, central bank coming up with a requirement that you should have, all banks should have 5% exposure to SME, but we are not able to reach that. I think when the circular was issued from central bank, the oil prices was, much above $100 a barrel. Now it's a very different thing, and it's a new reality. It is going to continue, the way it is. But I think it is also very important that there should not be too much dependency on SMEs when it comes down to, on government or other large sector. I think what you really need is innovation. You need ideas, from them as well, and then from, others to support that and then take it forward. I think even, some the banks are not able to achieve that 5% threshold, whatever has been established. But, what's the reason for that? The banking business is risk management. So if you have a good proposal, a strong proposal, which is backed with a real idea, it is tenable, I think you will get the financing. Definitely it will happen. Another thing is, I think one other important point which I would like to point out is, the overall entrepreneurship, how we can boost that. Within the education system and the sector as well. A very simple example, I'll say, within the schools, maybe you can have a very simple thing. Give a 10 real to all of the, kids in the class and then say, okay, you come back after a week, whether you have, made this 10 to 12 reals or you have lost and come back. So, what happens? You start thinking commercially, from the very beginning. I think this is something, these are small things which needs to be looked at. I think we talked about all the structural reforms and various things coming up, but I think, the members will be able to contribute more on this. This is just few thoughts which I had.
No, that's great. Actually, one of the things that you mentioned about mentorship, right? I've been involved with mentorship programs in other countries I've worked in. And we have a good panel here. Maybe we should all get together and talk about this and make it big. But corporates like UMS could help us. You're always leading initiatives like this. Maybe, have a panel where you provide mentorship to SMEs identified with good ideas which are successful. I wanted to go to Flavio on this. Flavio, one of the things is, when you were talking about the IMF reforms, you mentioned that the role of a governmental entity like Omran is to facilitate the development of tourism business and not actually to drive and run it. How do you see Omran's role in taking SMEs, getting SMEs involved in the tourism sector and boosting it? There are many, many opportunities, right? Because we have these widespread areas. And how do you think Omran or the authorities could contribute to development?
You're right.
Of
I mean,
SMEs?
the principle stands, even though overall SME should not solely rely on government sector to promote innovation and creativity. Governments, by DNA, I don't think is conducive of creativity and innovation. As you said, everyone can think of wonderful programs. Everyone can hire consultants to identify gaps, comes out with the initiatives and different type of lending structures. But at the end of the day, you need to have eligible SMEs who are ready to take on the risk and the responsibility. As you know, in the country, there are great examples of oil and gas sector-driven initiatives in country value, etc., like PDO, Oman Oil, that have done over the years. And that has evolved to a pretty sophisticated framework on how SMEs have grown under the various requirements. I understand ORPIC is doing great things about that. Private Zubair has great initiatives for incubating SMEs. At Omran, we have an IDV, which is investment development initiatives for SMEs. There's always a push, as I said before, from stakeholders to get SMEs involved. But it's often the case when you have instruction is it a headline instruction, 10% of value should be given to the SMEs. But then there is reality on the ground on what is the day-to-day life for SMEs. We're dealing with SMEs who, because of the lack of transparency, efficiency in the system in Oman, they're actually set up in a free zone in Dubai and they bid for work in Oman. At times, we actually select SMEs who happen to be UAE-based SMEs simply because they qualify better. So there are different levels of SMEs. There are different approaches. You should not confuse SME as a charity. Involving local community to supply the honey in the hotel like we do in Alila, for instance, that's a great CSR initiative. But being in a position of really developing the SME sector, that's a much biggest challenge. Government needs to be there, and in my view, it's very simple. In all these big programs, whether it's Tamfeed or many other programs that are scattered around the country, perhaps at the moment we have not reached a perfect alignment, but unless you have accountability and a way of measuring performance, you will fail at growing the SME sector. SME sector should not be there just to feed into the public sector. I'm from Italy, for instance. SME is the backbone of the economy. Over the last probably 20 years, industrial output in Italy just went down the hill due to bureaucracy, red tape, and politics. That's a simple fact. No, it's very common to have bureaucracy, unfortunately, working against you. Registering an SME business in Oman, it's a challenge. Unless you have a physical address registered in the municipality, you're not given a license or a permit to operate. Why? So I think there must be more aligned initiatives that can actually facilitate the infrastructure around SME setup. Not just access to credit and capability of winning work, but just facilitate the process, and the process should not only should be more transparent, but should be also cheaper. So that's the criticism that I often hear from companies which are capable of delivering the service, but unfortunately they tend to struggle. So Yeah, the question of the readiness of SMEs is also another topic. But as I said before, accountability and measuring performance are the key indicators to see whether or not TAMFID is a success or not. Someone has to be accountable for it. If you don't perform, you fail. If you fail, you step away. Look at Dubai, the way the government developed over the years. That's a good benchmark. Oman doesn't need to look at Dubai overall, but there are some pockets of very effective and efficient measures that have worked. So you don't have to look at Indonesia, Malaysia, and Hong Kong. It's next door. They look at the future. Blockchain, artificial intelligence, robotics, programming, coding. That's what they talk about at the moment. Here, you're still stuck with policies and procedure and documentation that backs from 30 years ago. And that's a big hurdle. The one-stop shop initiative is brilliant. It has to be there, has to work. But if that becomes a one-stop post office, let's say, well, that's not very helpful. So unless you have the WASTA, you cannot get to the right level. So it's normal, but it's the day-to-day reality of what a lot of SMEs face from the feedback I'm hearing from SMEs.
So I mean, you just mentioned that you use local honey producers for Alila. I have an example, the Canadian motor companies, right, when they're trying to look at costs, what they did was they identified components that go within the car, which they could use smaller companies, SME kind of companies, to manufacture for them, which basically ended up promoting the sector without actually having to invest or anything in it, right? They control their costs, and they also promoted the sector. To Vishal and Rajesh, here, in terms of manufacturing and all, do you see initiatives like this that could be put in place by Omani companies where they can outsource some of their minor manufacturing, thereby promoting the SME industry?
Yes, definitely. Like in manufacturing sector, we have many of the activities which are like a feeder shop for us. So if I take the example of transformer manufacturing, for example, so all the insulation or the bus bar, etc., is a feeder shop for us, and we can find out the fabricators, etc., and we can help them in getting the ancillaries built up around us, and we can support them. And apart from that, I'll take another lead from what you said in the beginning, like mentoring. And another point you said that we have in the country very big, young, vibrant crowd. So I'll say that young, vibrant crowd is not only there in the technical field, but also in the finance field, right? And when we talk about the financial services, naturally the first thing which comes into the mind for all big people is the big fours. They take help of the big fours. But big four can be very costly for an SME. So my suggestion would be that the young crowd can set up a new startup called, say, CFO services. And we as a experienced personnel can be associated with that, and we can mentor this particular startup. So with this, we can do our individual part of social responsibility, whereas this startup can earn its livelihood or self-sustaining earning people. That will be my suggestion.
Vishal.
So today we are 4.6 million people in Oman. When I came 20 years ago, it was 2.5 million people. And by 2040, as per Planning Commission in Oman, we would be between 7.5 to 8 million people. Now, to find jobs for everybody, I think is asking too much. And that SME is the solution. So when we compare US, some of these developed countries, then per 100, you have 10 SMEs. And in developing countries, including in Oman, it is per 100, it is 2 SMEs. So here we need more and more SMEs than the developed countries. And we can't grow as a large corporation if we just want to become stronger and all people surrounding us are weak. That won't happen. So I will just share with you one live example. we buy almost 30 million riyal of food stuff on an annual basis, and chicken and fish are major components as well. So we started looking for Omani fish, and we found that this fisherman has a lot of talent. But problem is on the hygiene. So when we supply to MOH and RGO, he had no idea how to really preserve it. And that's where mentoring and training comes into the play. So you need to really willingly go out and make it happen. And now this person is no more SME. He has between around 100 people, he has his trucks, and he is my best supplier. So two things happen. He has grown, and we are getting the best rates. And he has become my forever person. And that's what is going to happen. So in terms of SME, what we also need to look at the ease of the business. So Oman has fallen in terms of the ease of business from 67 to 71. Now, if the ease of business is not there, then how SME will thrive? So we need to work together, as my co-panelists mentioned, that you need to really make things easy. So when this fisherman came to us and we wanted to take him to OCCI to register, he was afraid. He was saying, no, I don't want to go anywhere. So we mentioned, no, we will come to you and we'll get the registration done, and then rest is the history. So that's very important, that you need to put extra effort, and government commitment and government support is the past. Now you need to just go on and do that. Don't look for any guarantee. Guarantee won't happen now.
You know, actually taking up from that in terms of mentoring, right? He said that's absolutely right, that at the end of the day, corporations need to look at that actually having stronger, better SMEs and working with them will strengthen your own organization rather than look at them as, you know, charity or competition. They will be competition, but good competition for you. I'm going to go to Loe on this one. What do you think are the challenges the banking sector faces in terms of meeting their targets for SME financing? Because that's one of the factors that will help, but it doesn't have the right output.
Thank you, Nat. Actually, being served with a bank almost more than 30 years in my life, and I've been through SME's cycle, and I was in corporate before. SME in definition, frankly, is different from one country to another. And something which I need to advise, and I keep advice, and I wrote it a couple of times. We should take other countries' experience. And we might be common in difficulties and basically what they faces, but the solution should be different. I'll give you examples. Vishal mentioned something about fishermen, which is typical situation or success story for SME. But if you take it for another country, I lived in Singapore. This guy will be out because they cannot basically get into environmental and hygiene issues. This is not in their... SimCorp in Singapore was SME, started as SME. It's a beautiful story. I would advise everybody to go through this story. When it comes to banking, frankly, even though you mentioned, Sanjay mentioned about central bank guidelines that you have each bank to meet 5% minimum of their loans portfolio to be given to SMEs. But what's not mentioned there, what the quality of SMEs we should absorb. Because you can have big, basically fat company and they have different SMEs. What I'm saying, banks did not mind to fund and help SMEs as far as they have the system and the procedures. And at the end, bear in mind also we have Central Bank of Oman on the other side as a regulator. We have the auditors, Sanjay also. They have to meet certain minimum requirement in order to reduce NPLs.
Yes, absolutely.
And frankly, we don't have problems in SME. I was in a bank which was very, very successful in SME. But I will tell you why they were successful, that particular bank. Not because SMEs, because he used to deal with a person who's in charge for SME.
Absolutely.
Personal relationship. This is different between Oman and Singapore or India or Sri Lanka. Here, if certain names coming, for example, XYZ come to my office, I'll tell me, okay, I will take care of that. Frankly speaking, I will take his word as a guarantee. But if you come to the balance sheet and the income statement, no, this is not happening. What I'm saying, banks, they have to improve the relationship with SME in order to step down a little bit and to start helping SMEs. And banks did this before with other sectors. For example, I know from banks, when construction sector under pressure, a lot of banks send their team to sit with the CFOs to help them in cash flow, develop the cash flow, etc. And because of that, we have something called corporate finance in certain banks. I suggest, or I believe, not suggest, I believe, banks, in order to groom SMEs, they have to step down and help SMEs. And this is very, very profitable business, by the way.
Yeah.
It's not for people who do rates which is applied to SMEs is above the corporate rates.
Yeah. Thank you, Louis.
And sorry, people who's fishermen who's borrowing take a loan from a bank, he will run to settle the loan. It's unlike, for example, somebody like XYZ. He said, no, banks will chase me. And this is the beauty of SMEs.
I love, Loe, how you have your own perspectives. These are fantastic. It's good for everybody as well. Anyway, I've been already warned on time, and I want to end it on a positive. So I'm going to say, everybody will have 1 minute after I finish, though. And it's what I want to say is the last couple of years have been a struggle for all of us, for the country, for businesses, for the people. But I think there have been some good initiatives that has resulted in the economy being relatively stable. We've seen some numbers, yes, but growth doesn't always mean numbers. It means a changing environment. I think all of this will add to tomorrow for us. Thankfully, by the grace of God, the price of oil is at 70. I hope it stays there and goes further up. The companies have learned their lessons a little bit and are more equipped to handle these kind of situations for the future. They understand that it's not always going to be the government holding their hand and pulling them out of trouble. They need to do things on their own. So I'm going to ask all of you guys to tell me, in turn, 1 minute, what do you see are the positives in the last 2 years, and what do you see as positives for the next 2 years?
So, Ned, 1 minute is, I think, is a good one in a sense that you can't say 3-3, but let me try that. So, when I was just going through, from Muscat to Salalah by road, because once in a year you adventure, and you were just chatting, and one of my Omani friend mentioned that, Vishal, that Oman is among the top 15 countries in the world in terms of road network. So our position is 14th. That is a remarkable position. The kind of the rate network we have, road networks we have created. So some of these things are very positive. We are doing tanfi. That means we got aware that status quo is not going to happen. So let's do that. Last point is the oil price. If we all are looking to oil price to go to $90, I think then we are in really in that world, because India and China, 30% of the world population is going to import more and more oil, and if it is $90, then the rice and wheat which we are going to import here is going to be high. Oil should be at an affordable price, which a buyer can buy and seller can sell. So all the programs, these initiatives, these dialogues, what we are doing, I think is the realization that something going better is going to happen. And $70, I think a lot more good is going to happen. We are seeing that at company level and for the country as well.
Thanks, Vishal. That was quick.
We talked a lot on SME and job creation. I think another important point, just in the last 1 minute, I would like to say is the public-private partnership, PPP. I think we have not touched at all on this. That's something is going to be very critical as going forward. We have success stories, although we never talk about, but it's, oil and gas sector. You have got these operators coming and doing business in Oman. That's a very successful PPP model. We have the power plants, water plants coming up. I think now it has to go, move into, take more things into this, the hospitals, schools, and various other ways. So I think in terms of the infrastructure spending from the government, it has to come down. They have to come up with the framework. The framework should be very clear, and the execution should be done from the private sector. I think that's really key going forward for everyone to, embrace and take on.
Thanks.
I think the Tanfeed, which is the outcome of Tanfeed, is the brainstorming output of many minds. So what I see that now the country has got the focused direction, and when we work regularly on the implementation of the outcomes of Tanfeed, I think we have a great future for improvement. Then there are many projects which are coming in the power sector. Renewable sector is one of them. So in that I see the job creations will be more, and in this particular industry will see more growth in the future.
Thanks, Rajesh.
So Vishal mentioned infrastructure, hard infrastructure, and I think I want to add to it, there's the soft infrastructure. Oman has, the earliest and best privatization structure, for example, for the power sector of anywhere in the region. And in addition to that, I think recently we've seen, even in these difficult market conditions, the global interest in investing in Omani financial instruments has continued to be strong. So the opportunity is there. Oman, alhamdulillah, has a lot of very good friends in the world, a lot of very strong relationships, and a lot of opportunity. And I think the hard infrastructure, the soft infrastructure is all there, and it's a question of a little bit of more momentum to unlock all of that, or to accelerate the rate of that, is really where we are. So I think there's many, many reasons to be optimistic.
Thank you, Mohammed. Loy?
Actually, if the answer last 2 years or the next 2 years, I would say it is the same for me. Frankly, I saw a lot of very good initiatives last 2 years, and next couple of years will be coming on. The most important thing for me, I start to see a lot of reforms. For example, colleagues talk about Central Bank of Oman reforms, about certain ratios. If you ask me 1 week before that, I would say, no, it's not easy. If the the physical policy talk to monetary policy and start doing a lot of reforms together, I think we will be in very good position. A lot of things happen in SMEs, initiatives, yes, true. And I'm so happy to see on energy, renewable energy, they start working out of the box. Mindset, personally, I start to feel in government level is changed or is start to change. Flexibility from the government, flexibility from regulators, CMA, CBO, they are really, really supporting all initiatives right now. One thing which, frankly, I'm positive and I don't want anybody to be, we talk about IMF report and the positive sign about banking sector. I'm being a banker in my career. There is big sign, This is like basically answering Moody's downgrade about banks. When IMF is talking about physical policy and positive, and something is important, they mention about foreign reserves. By the way, $16 billion foreign reserve, which will be able to cover 6-month imports. If, for example, if I assume for the next 6 months, we are not exporting or getting $10, our Central Bank of Oman reserve will be able to fund for the next 6 months. This is very, very good in international standards. Frankly, I'm positive. I hope Tanfeed program initiative will come through, especially certain sector which we can add a lot of value, in-country value. This is where we need to focus, in-country value, to basically maintain and also attract more foreigners and expatriates to continue working and investing in Oman.
Thanks, Loy.
Yeah, if you look at the demographics, I believe, and don't quote me on this, but over 80% of the population, Omani population, is actually under the age of 25. So it's inevitable to hope and think that the future lays on the brilliance and energy of the new young generation. There's 25,000 graduates every year. Government came up with some announcement recently in trying to accommodate 25,000 across the sector. And I'm sure that they're facing some challenges, but just think about going forward. This 25,000 is every year. So it's great to come up with planning, policies, initiatives, but unless you do some drastic changes, perhaps even to the labor law and requirements, it's going to be a big challenge going forward. The baseline assumption that a job is an entitlement, unfortunately, in today's age, is not sustainable.
I agree.
So young generation needs to replace the old generation somehow, somewhere.
Thank you, guys. Just a couple of things that I wish we had more time, but as Sanjay mentioned, the public-private partnership, Loe talked about renewable energy. PDO made an announcement a year back, which they were going to have a major drive into renewable energy. This should drive up the sector greatly. If we have time, maybe we can take a couple of questions if anybody has any. Do we have time? No, we were that enlightening. Okay, I guess we did a good job. Atulya has a question.
Not really a question, but just a comment. You talked about mentorship and how UMS or all the corporates present in the room today can participate in that initiative. Not just thumping right now, but just to let everybody know that we initiated a program last year. It's called Ishraq, whereby we train people for the social media and the digital marketing domain. We trained 15 of them last year through National Training Institute, so that it was a properly orchestrated sort of a program. And we've been able to retain 7 of them, and 8 of them have been gainfully employed by other corporates. So I think that's a very valid point, that mentorship is the way forward. The corporates will have to possibly hold hands, One comment that I would like to make is, on one hand, we talk about, the banks being entitled or having that mandate to loan 5% of their book to SMEs. But if you go and talk to the SMEs, and I do a lot of that because we, by nature of our work, have to work with SMEs very closely, the SME guy doesn't know where to, go ahead and get a loan from.
And this
so
is where
it's an ironical situation. We have so many institutions that have been set up for lending to SMEs, but the SME guy doesn't know where exactly he should be going and tapping doors, So that's where we are. It's more
valid, very valid, but that's where I think the mentorship will come in as well. And we'll talk about, I was instrumental in doing a Skills for Change program through the Canadian government, and mentorship on a long-term basis rather than a short-term to make sure a guy is successful. But anyway, thank you. We don't have any questions, so you guys did an amazing job. Thank you very much for your time and for sharing your knowledge with us.
Thank you to the panelists and Mr. Vora for that wonderful discussion. Can we have a huge round of applause for them, please? Now that brings us to the end of the first part of the summit. Ladies and gentlemen, we'll have about a 15-minute networking and refreshment break, and I'd request that everyone to please assemble back quickly so that we can get started with the second session of the summit on time. Thank you very much.